Okay, welcome back. That was distribution costs and now administration expenses. So administration expenses would be every other expense we can see on the page, really. So what we could do is we could look down through the expense column. The debit side is where all the expenses are, to find what expenses we can find, and also then look to see if there are any others inside in this additional information. Okay, so going down through them, I'm just going to have investments, no; patents, no; land and buildings, well, we assume we're going to have to depreciate them, so we'll come back to that in a while. No, that's an asset. Let's see now. Debtors and creditors, no; purchase sales, no; directors' fees, 89,000. That'll be our first one. So over here we have admin expenses, and we said director's fees was 89,000. Okay, at the start. There we go. So if we keep going over here, then we had director's fees, salary and general expenses, again 175,000. We'll definitely include that. So plus 175,000 there. Keep going down through it. Next thing is advertising. We already had that in our distribution costs. Then rent of 30,000. Now we know that's rent paid out or payable because it's on the debit side. So it's not, again, it's an expense. So we'll include that as well. So plus 30,000. Okay, back here we're running short. The only other thing on this side is dividends, and that's not an expense. Okay, so if we go down further, then we've already said we've got to depreciate the buildings, so we'll have a look at that in a moment because that's probably a bigger calculation to do. But for now, if you have a look down here at the bottom, the very last one, it says part 6, provide for debenture interest due, we will; investment income due, we will; auditor's fees, so that's your accountant's fees, 8,400. We'll certainly have to add that in, and the taxation is not an expense, so plus 8,400. And then the last thing we're going to have to do is depreciate the buildings. So let's have a look. It says in part 4 and 5 we have a little bit to look at. So part 4 says on the 1st of the 7th, so exactly halfway through the year, land which cost 100,000 was sold. On this date, the remaining land and buildings were revalued. Included in this revaluation is land now valued at 160, but which originally cost 50,000. The revalued buildings had cost 530,000. Okay, we'll deal with that in a second. Let's see, it says in the next part, depreciation is to be provided as follows. Buildings at a rate of 2% of cost per annum until date of revaluation, and thereafter at 2% per annum of the revalued figure. Okay, so since the revaluation happened halfway through the year here, 1st to the 7th, we'll do 6 months, 2% for the original value, and then for the second half of the year, second 6 months, 2% at the revalued amount. So let's see, if we look at, first of all, there's a lot of information in here. Just to boil it down, I suppose, the first thing we look at is the revalued buildings, because there's land and buildings, but the revalued buildings themselves had cost 530 originally. Okay, so if we look up at the trial balance, we can ignore this for now because what they have is the revalued figure here. So what we really want is we want to know for the first 6 months what was the cost before the revaluation. So it was 530,000. So if we go over here and we just do a quick 530,000 by 2%, and then by 6/12 for the first half of the year, it's going to be 1% is 5,300, isn't it? And then 2% is double that, but then by 6/12 is half that again, so 5,300, isn't it? 5,300. And then back to the information over here, it says included in this revaluation is land now valued at 160. So if the land is now 160 and the revaluation of the land and buildings in total is 860, then the buildings part after revaluing must be 860 minus 160, must be 700,000. So if we base our calculations on that, 700, again 2%, and again 6 months, that's going to be 7,000, and 2% is 14,000, but then half of that again is 7,000. So 7,000, and then add the two of them together, 12,300. 12,300 is your depreciation on buildings. Okay, so your depreciation on buildings then must be added in over here, and that's plus 12,300. Okay, and we've got to add all of that together, so give me a moment. 205, 300, 700. 700. Okay, so, and it goes up here, 314, 700. Okay, on an odd occasion, they may in the question stipulate that some of the buildings were something like a showroom, if they were maybe selling cars or selling furniture and they had a showroom. In that case, that would be part of that would be considered a distribution cost. So they would have to tell us though how much. So they might say something like 30% of buildings depreciation goes into distribution costs and 70% to administration expenses. But they would definitely have to tell us. And otherwise, if they don't tell us anything like that, then all of it goes into your administration expenses.